This video will start shortly. Please note, this is the continuation of the previous video on withholding tax and value-added tax. Check the description below for the link to the previous videos so as to have better understanding of this video.
Okay, so we go to the third question. The third question says, Graceman issued an invoice to Payable project for custom-made t-shirts, 400,000 naira, 7.5% VAT imposed. From this, from what we have saw so far, we know well that because the question says it is 7.5% VAT imposed, this 400,000 is not 100% but 107.5%. So the first thing we need to do is to separate what the contract sum is and what the VAT element is from this 400,000. So you can say that the contract is what is 100 times 400,000. The VAT element this will be 322,000 and 39.02. Why this gives us 27,960. We know well that in the previous episode, we need to know the suppliers, we need to know the customers. Graceman here is the word supplier. Graceman at the head of the government, and as supplier at the head of the government to charge, collect, and remit value-added tax. While Payable project as the customer is the head of the government to deduct and remit withholding tax. So from this 400,000 we have established that 372,093 naira 2 kobo is the contract sum, while 27,906 kobo is the VAT element, giving us the total invoice amount of 400,000. So the next question is, what will be the accounting entries for this in the book of the supplier, and supplier is Graceman. We have the revenue for Graceman. We want to be credited to the contract sum. The contract sum is 372,093.02. VAT paid. VAT paper can be credited with 27,906 naira 94, and the receivable account Payable project will be debited with the total, which is 400,000 naira. 400,000 naira. Having done this, it is important to also go further to explain the accounting treatment of this transaction in the book of the customer. The customer is what? Payable project. So in computing what will eventually be paid to Graceman, we need to do some computation, and the first thing we need in our computation is what is the contract sum. The contract sum is 372,093 naira 2 kobo. From the contract sum, Payable project as a customer, being the agent of the government to deduct withholding tax and remit to the tax authority, we need to subtract the withholding tax, and the withholding tax, which is 10% of the contract sum, will be subtracting this, we have 334,883 naira 72 kobo. What do we need to do after that? What we need to do after that is to add the VAT, because VAT was the one regulated. And we know that the VAT is 27,906 naira 98 kobo. The addition gives us 362,700 719 naira 80 kobo. It is important to mention that, as I said in the last two questions we saw, that there is a difference between what Graceman is expecting from pathway project and what pathway project is planning to pay Graceman. And I said for emphasis that is the withholding tax. And what will the accounting entry in the books of pathway project? The accounting entry in the book of pathway project will be the t-shirt is for advert. £400,000. As the agent of the government to deduct withholding tax, the withholding tax payable account will be credited with 37,209 30 kobo. And what is the amount payable to Graceman? The amount payable to Graceman will be 362,790 70 Let me say this. This withholding tax payable account is credited. What will now be the accounting entry when Pathway Project Limited is now remitting this withholding tax that will be deducted from what is payable to Graceman to the tax authority? The accounting will now be the withholding tax payable account will be debited and what, and the bank Pathway Project Limited is using to remit such from the what will be credited. Let's now go to the accounting treatment when Pathway Project eventually pays Graceman. When Pathway eventually pays Graceman, based on the condition of Pathway, this is the amount that is due to Graceman. And I said that this is the amount Graceman is expecting from Pathway. So, basically based on the assumption that Pathway is paying at once, that will mean that the bank of Graceman will be debited with 362,790 naira 70 kobo. Pathway project will be accounts in the books of Graceman will be credited with this. And I said that based on this first treatment, in the books of Graceman will still have it that Pathway project limited is owing them this balance. And because they know that it is not that Pathway project is owing them the balance, what happens there is Pathway project has deducted withholding tax, and such withholding tax, such deduction should have been remitted to the tax authority. And how will Graceman know that Pathway has remitted the fund to the tax authority? Graceman will get their credit note. It is a credit note that serves as the evidence that Pathway has remitted the withholding tax to the tax authority. So just so that the books of Pathway, the account of Pathway in the books of Graceman is clear, it is important, knowing fully well that the balance that is due to Pathway is what Pathway has remitted to the tax authority. It is important for Graceman to raise an entry between the withholding tax recoverable and the books of what and the account of Pathway project in their book. So what will happen? Withholding tax recoverable will be debited with 37,209 30 kobo. While Pathway project will be what? Credited with 37,209 30 kobo. The total still gives us 400,000. While we handle this episode, let me just say this. What will now be the accounting treatment at the end of the tax year? The accounting treatment at the end of the tax year will now be to credit the total tax recoverable with what is there, and credit the total tax recoverable with the balance there with the tax due, and debit the tax liability account. Let me just say this, that if withholding tax recoverable is greater than CIT, it simply means that what? That the tax authority the taxpayer still has credit with the tax authority. But if withholding tax recovery is less than CIT, taxpayer has a shortfall. Hence, cash will need to be paid to settle tax liability. Thank you so much for joining this. Thank you so much for watching. Do not forget to like, share,